Hey there. I hear you just had a record breaking quarter for your HVAC, plumbing, or electrical business. Well, at least that's what your financial reports say, right? But then you went and tried to pay your suppliers or cover payroll, and you checked your bank account, and there's not nearly enough there. Sound too familiar? Well, you're not alone. The biggest financial mistake business owners make is confusing profit with cash flow. In this video, I'll show you why even profitable businesses can still go broke. I'll help you identify your specific cash flow issues, and I'll give you some practical solutions to fix them. So why do profitable businesses still go broke? Most business owners believe that if they're profitable, they're financially stable, but that's not always true. Profit is what's left over on paper after you deduct expenses. Cash flow is actually what's in your bank account, and sometimes that can be a big difference. Example number one, loan payments. So when you take out a loan, the loan proceeds hit your bank account with little to no impact to your profit and loss statement. Similarly, when you repay the loan, you'll only see the interest expense on your profit and loss. So your profitability looks quite good. Well, why is that an issue? Well, in the background, your cash coming out of your bank account, your cash flow, is actually going to be the summation of the principal and the interest. So while you may look more profitable on paper, the reality that's hitting your bank account can be different. So example number two, delayed payments. So you've completed the job, you've earned the revenue, but you haven't actually collected it yet. The invoice is sitting outstanding. Well, you could be cash poor. So this is common with commercial clients where you are running net terms, but can also occur with financing companies and the delays that exist there. So while you're waiting for the cash to hit your bank account, you still have to pay payroll, you still have to pay your supplier bills. So ultimately, while you look profitable on paper, your cash flow is going down. Example number three, inventory. When you buy materials or equipment, you often pay up front, but you don't realize the revenue until the job is complete. This creates a cash flow gap. So for example, let's say you stock up on $40,000 worth of HVAC units for the upcoming busy summer season. Well, that transaction doesn't hit your profit and loss until after you've completed the job and used up that inventory. So your cash flow takes a huge hit with no impact to your profit and loss. So again, the profit and loss or your profitability doesn't always tell the full story. So I want to tie a few of those examples together in a scenario. So let's say you take out a $100,000 loan to expand your fleet. You immediately spend $50,000 of that on vehicles and equipment. The remaining $50,000 stays in your bank account. You generate $10,000 a month in profit, and you repay that loan over 36 months at $3,000 a month. And I'll even cut you some slack. I'll give you 0% interest. Now, let's also say that your clients are taking 60 days to pay their invoices, which create a $40,000 cash gap in your accounts receivable. And you take $60,000 to pay yourself throughout the course of the year. So let's see how that would look. So on your profit and loss, you're going to see the $100,000 a month in revenue, $90,000 a month in expenses, and that's that $10,000 a month. So $10,000 times 12 months, boom, $120,000. P&L looks great, right? We made $120,000 this year. But did we actually? So on the cash flow statement, you're going to see, all right, we started with the $50,000. All right, we added in our $120,000 of profit. Boom, we're up. Well, now we have to pay that loan. So the balance drops $36,000. All right, now our receivables are slow. We don't actually have that money in our bank account, $40,000. And we paid ourselves throughout the year. Boom, $60,000 gone. So adding all that up, we started the year with $50,000 in the account, and we ended the year with $34,000 in the account. But shoot, we had $120,000 in profit, and that's where they get you. So profitability does not always equal liquidity. So we need to be very careful and make sure we're looking at both. So what's the difference between profit and cash flow? So profit is what's left over after expenses on paper. So that's going to be your profit and loss, your income statement. Cash flow is the real money moving in and out of your business account. And so you'll need to look at your cash flow statement to see that. So the key difference is profit includes the revenue you haven't collected yet, and it doesn't reflect loan payments or owner's draws. That's why it can be misleading. Like we showed in the scenario previously, you can be profitable with an empty bank account. And now cash flow, it reflects real-time money movement. It accounts for those loan payments, it accounts for owner's draw, it accounts for asset purchases, and it shows whether or not you can actually pay your bills. So what's the solution? Well, here are 5 cash flow fixes to help prevent issues even if your business is profitable. Solution number 1, get paid faster. So if you find that you're waiting too long to get paid, you have a couple options. So 1, you can stop offering long payment terms, such as, net 30, net 60. If you really can't afford to wait, make them pay you when the job's complete. Or you can require deposits or progress payments if you find that your issue's coming because of larger jobs only. You can alternatively incentivize early payments even while offering those long payment terms by small discounting, 1-2% with a very short net window, but only do this as a last resort. And then make sure that they know you're waiting on the payment. So use a software like Jobber, Service Titan, Housecall Pro that automates the invoice payment reminders to your customers. Solution number 2, have more cash. Yes, build a reserve. So if you find that you're running out of cash during slow seasons, set aside 2 to 3 months of operating expenses in a reserve account. I know that sounds like a ton. You should build this up slowly over time. Put a small percentage and sock it away and forget about it and make that your cash reserve. You should be able to build up this 2 to 3 month reserve in 12 to 18 months, and it will help you cover payroll, supplier bills, expenses during those slow seasons. Solution number 3, vendor payment terms. So are your bills due before your customer payments are arriving in your bank account? If that's the case, you might want to consider negotiating better payment terms with your suppliers. So request for a longer term, such as a net 45 or a net 60, to stretch your payables. This will give you more time to collect the revenue before paying the bills. And if when you do pay, make sure you pay strategically. Take advantage of early payment discounts only if your cash flow allows. Otherwise, leverage those payment terms. Solution number 4, understanding your cash flow. So are you carrying too much debt? Are you drawing too much or at the wrong time for owner's pay? Separating profit and cash flow and understanding the numbers behind each is key to understanding your particular business's problem and solving it. So I recommend using QuickBooks Online or another accounting software. That way you can track your receivables aging, make sure any late payments that you're owed, you're following up on those aggressively. Make sure you know what your loan payments are and when you have to pay them. Make sure you know what you're paying yourself and when you're paying yourself. With that information, I would create a cash flow forecast in Excel or a tool like Fathom or even QuickBooks and project out your income, project out your expenses, and include those payment timelines. And ultimately, then you should be able to see when you're going to have cash flow problems. And the key here is you'll be able to plan to solve them well in advance. Don't let slow cash flow kill your profitable business. Let me know in the comments, which cash flow challenge do you struggle with the most? Is it late payments, debt, slow seasons, paying yourself too much? I'd love to help you out. I'm Austin with Accounting for Trades, where we help HVAC, plumbing, and electrical business owners by plugging profit leaks and keeping cash flowing with no-nonsense accounting. Talk to you later.